Something important just changed in the gold and silver market, and it didn't come from a headline. It didn't come from the CPI, and it didn't come from a rate cut, and it didn't come from some political soundbite. It showed up quietly in futures positioning, in volatility, in the way liquidity is behaving behind the scenes. And here's the problem. If you're waiting for the mainstream explanation, you're already late. Because right now, gold is refusing to break down, silver is behaving erratically, and platinum is starting to act like it's waking up. And those three things do not happen together by accident. What's happening right now is a structural repricing, not a trade, and the signals are coming from places most people aren't watching. So in this video, I want to walk you through exactly what changed in the last few days, what the CME and the volatility data are actually telling us, and what we're seeing directly from real buyers and sellers, before this gets wrapped up in some narrative that misses the entire point. So let's talk about exactly what we're going to cover today. Number one, what changed in the last few days and why it matters. Why gold and silver and platinum are suddenly acting very differently. What CME positioning and CVOL are signaling right now. What real buying and selling flows are telling us. And the signals I'm watching next. Not guesses, actual signals. And a quick disclaimer, before we go further, this is educational, not financial advice. I'm sharing observations and analysis, not telling you what to do with your money. All right, let's start with section one. What actually changed recently? This move didn't start with panic, and that's important. There wasn't a single headline that kicked this off. No overnight shock, no sudden, oh no moment. What changed was confidence, and more specifically, confidence in how smoothly things are supposed to keep working. Over the last couple of weeks, especially coming out of places like Davos, the tone has shifted, and it's subtle. Less certainty, more conditional language, more we're watching less, we got this. Markets pick up on tone before they react to policy. At the same time, debt issuance keeps rolling along. Auctions are clearing, and buyers are choosier. Pricing is doing more of the work. That is not a crisis, but it is friction. Gold tends to notice friction early. That's why this move feels controlled, almost cautious, like the market is testing the floor instead of charging higher. Now let's move into section two. Why gold and silver and platinum are behaving very differently. Gold right now feels steady. It's acting like insurance that's being quietly repriced. Not because the house is on fire, but because people are checking whether the policy still makes sense. Silver is a very different story. Silver is being pulled in multiple directions at once. Industrial demand expectations, monetary demand, and a futures market that amplifies positioning shifts. That's why silver doesn't glide, it snaps. One day it looks calm, the next day it's swinging multiple percent for reasons that just don't fit the headline. That's not manipulation, that's silver being silver when positioning gets crowded. Platinum sits in its own lane. It's thinner, it's more industrially sensitive, and it tends to react later, but when it moves, it can move fast because liquidity isn't deep. So when you see gold calm, silver volatile, and platinum quietly firming or lagging, that's not confusion. That's three different markets responding to three different pressures. Now let's move into section three. What the CME positioning and volatility are telling us right now. This is where CVOL really helps. CVOL doesn't tell you where price is going. It tells you how uncertain the market feels. And when you break it down by metal, you get a clearer picture. Gold CVOL right now is elevated, but not chaotic. That tells me this isn't panic, it's uncertainty being priced in. The silver CVOL is more erratic. Spikes come faster. Compression doesn't last long. sharp moves, quick reversals, and sensitivity to margining and positioning changes. The platinum CVOL tends to lag, but when it picks up, it usually does so quietly before price follows. Now, what I'm watching here isn't just high or low, I'm watching changes. When CVOL rises without price breaking, that's stress. When CVOL falls while price holds, that's acceptance. And right now, gold looks like it's being accepted at higher uncertainty levels, while silver is still being negotiated. That matters. Liquidity stress, by the way, doesn't announce itself with crashes anymore. It shows up as friction, bid-ask spreads behaving oddly, premiums not compressing the way they used to, physical metals feeling tighter even when futures look calm. Those are early signals. Now, we talk about this a lot in my videos that release on Tuesday morning, and we carry CVOL in depth. If you haven't had a chance, make sure you watch that video because we go into the actual numbers there and show you exactly what's happening on the CME and with margin rates, which clearly are causing metals to move in this environment. All right, now let's move on to section 4. What we're seeing from real buyers and sellers. This is the part I think is getting completely missed. We are seeing at Summit heightened flow, especially on the sell side. Every single morning, we're responding to customers who want to sell metal to us, and not often in small amounts. We're buying a meaningful volume of gold, silver, and platinum directly from our customers. And what's interesting is why they're coming to us. Some are rebalancing, some are raising liquidity, but a growing number of people who've been told no elsewhere. Local coin shops saying they're full, other national dealers not bidding, or only bidding on very specific products, and that's important. It doesn't mean there's no market, it means liquidity becoming selective, and at the same time, we're still seeing steady buying, not panic buying, not what I'd call FOMO, just deliberate purchases focused on certainty, delivery, settlement, counterparty reliability. That combination, more selling and measured buying, tells you this market is being used properly. And a risk management tool is important. This is not a casino, and historically, that kind of two-way flow shows up before volatility resolves, not after. All right, now let's move into section 5, the signals I'm watching. Again, these are not predictions, not hot takes, these are signals. I'm watching real rates relative to nominal rates, auction demand, quality, not just yields, CVOL changes in gold versus silver, CME positioning, sensitivity to margin and volatility, physical tightness relative to paper volume. When those line up, metals don't need a story, they move on math. And I want to end with this, because it's important to say out loud, this is not a collapse call. It's not a doomsday trade. This is not a sell everything moment. This is a repricing of trust, slow, uneven, and easy to misunderstand if you're only watching headlines. Now, if this helped you to think more clearly about what's actually happening in the metals market right now, please hit the like. It tells me we're keeping up, we're doing what you expect of us with these analysis, and that we are providing these hot takes as it becomes relevant in the market. Please share this with someone who's watching gold, silver, platinum, and wondering why it just feels different. And drop a comment. What signals are you watching most closely right now? Thanks for tuning in this week, and happy stacking.